Accounting of technology. After studying this chapter, you will be able to develop the various technology that has been significant impact on the accounting professions like cloud computing, artificial intelligence, cybersecurity. Recognize the benefit of the technology, how they have changed the way of accounting improve performance systems. Examine the challenges that accounting profession face in adopting the new technology and appreciate the importance of accounting profession staying up to date with the latest technology. The automation of accounting process will various technologies in a various NDAS based situation. So, chapter review evolution of accounting is the current state of technology accounting, cybersecurity, futures of technology, future of technology accounting, Indian accounting standards, and information technology. So, a current state of technology, automation process, benefit automation process, challenge of automation process, robotic automation process, cloud computing based benefit of cloud computing, challenges of cloud computing, enterprise resource planning, benefit of ERP, how does the ERP system work, illustrate the steps of integrating internal control over financial reporting within ERP, cybersecurity and accounting common, cybersecurity threat, proactive measures in mitigate cybersecurity risk, futures of technology of accounting, blockchains and artificial intelligence. Introduction. Accounting is a crucial function of all business. It is enable them to track and managing the financial transactions, budget, and investment. The world of accounting has undergone significant changes in recent years, primarily due to advancement of technology. As the business has embarked digital transformation, accounting profession has evolved, becoming more efficient and accurate with the help of other new technology. It is not the intent of chapter to discuss the particular accounting software in detail. And the chapter will not remain, for instance, common to pass vouchers and software like Tally, SAP. This chapter intend to provide the overview of impact of technology in the accounting profession. It highlight a trend of the transformation of industry and challenges that accounting profession faces in adopting new technology. The chapter commences discusses the history of accounting and evolved over time. Accounting practice were one mutual manual and paper-based, but advancement technology has enabled automations, making accounting process faster and more efficient. Chapter relates with the various technology that has significant impact on accounting profession. The technology involves cloud computing, artificial technologies, cybersecurity, etc. The chapter discusses the benefit of the technology and how they change and way accounting performance systems. For example, cloud computing has made it possible for accountant to access financial data from anywhere in the world. This chapter also examines the challenges an accounting profession has to adopt a new technology. For example, the technology of implementation of new technology can be costly, and many business can may not have the resources to invest in. Additionally, some accounting profession may resistant to change and prefer to stick with the traditional methods that are comfort with them. This chapter concludes the highlights of the importance of accounting professional. Stay up to date with the latest technology. The business continue to embrace digital transformation. Accountant must be able to adopt new technology and remain competitive in the industries. This chapter emphasizes the need to undergo education and training that ensure that accounting profession have skill that need to succeed in the increasing digital world. Evolution of accounting section provide detailed history of accounting and earliest origin to modern day practices. Undergoing history of accounting is used essentially in comprehending current days of profession as the role technology for playing in evolution. The origin of accounting are traced back to ancient civilization of Egyptian, Greek, and Roman. And it is a early civilization. Accounting primarily involves record keeping of tax purposes for the management of government resources. This early accounting process are manual and paper-based. The process of labor intensive. By the time of Roman Empire, the government had access to detailed financial information. In India, Chanakya manuscript, authored a manuscript similar to financial management work during the period of Moran Mauryan Empire. This skill, Arthashastra, contains a detailed aspect of maintains the books of accounts in sovereign state. The Italian Luca Pacioli is the father of accounting and bookkeeping as the first as a person to publish a work on double entry bookkeeping. Therefore, the introduction of the field in Italy, subsequently the accounting practices evolved in the help of double entry bookkeeping. This means enable the business to create balance sheet shows the financial position of the company in the given time. Introduction double entry bookkeeping is a significant stone in the history and accounting laid on the foundation of modern day accounting practice. With the industry revolution, significant changes come to the accounting person due to the event of machine mass production. Accounting becomes more complex, require more detailed resources of financial transaction. This period saw the rise of accounting profession. This establishment of the first professional accounting organization. The Institute of Chartered Accountant of Scotland, the world's oldest first professional chartered accountant body, was established by the Royal Charter in 1854. Subsequently, the organization Institute of Chartered Accountant in England and Wales certified practicing accountant in Australian, American Institute of Public Certified Public Accountants and Chartered Accountants, Ireland, established in 19th century. With the event of 20th century, the Association of Chartered Accountants established, followed by the organizations such as Institute of Chartered Accountant of India, Institute of Singapore Chartered Accountant. It is an post-industrial period. Technology advancements such as a computer transforming the accounting profession. The introduction of the computers enabled the accountants to automate many of the manual processes associated with the accounting, making a process faster, more accurate. This elucidated further in interest calculation in banks, which calculated system driven was most computed manually by the bank staff. Given the huge volume of transaction, interest computation usually took over the month of each bank, and the chances of error were very high since the same since was manual. So currently, there is an upsurge of technology in accounting field, accounts of cloud computing, artificial intelligence, all of which is transforming the accounting profession, making it more efficient and accurate. However, new technologies also prevent the challenges of accounting profession who must adopt the new system of process of remains competitive. Current state of technology in accounting. The setting provision of in the provision of current state of technology in accountant profession discuss the various technology used in the accountant and the impact of the profession, including automation, cloud computing, artificial intelligence. Automation process. The major changes in visible of automation is the accounting process. Automation is used software. These tools automate manual processes, making them faster and more accurate. We can understand this with the help of the below example. For instance, let us consider the activities involved in the process of procuring grocery from a department store such as a Walmart or a Line supermarket at the front end. Step 1. The customer picks his grocery and reaches the billing counter. Step 2. The person on the counter merely scans the item barcode. The scanning automatically reads the data and input the item produce and corresponding selling price. By scanning the barcode each item, the bills are generated with a couple of minutes, and the customer makes a payment and bill is printed and handed to the customer. The entire process happens in the fraction of seconds and saving a valuable time and mitigating all the errors. However, at the back and below activities taken place. As and when the barcode items are scanned on the billing counter, the inventory of the said items of the department store is simultaneously updated, recording, issuing a sale of the same, and the ensure the accuracy is maintained of the inventory data. Periodically, physical stock of the inventory will be given conclusion evidence of the correctness of the data generated by the system, thereby giving comfort to the management assessment of accuracy valuation of existing inventory. In certain cases, software is also programmed to do that indirect taxes levied on the sale price as the invoice is updated simultaneously, then can get uploaded on GST portal at the end of the every day, and the accounting team is back in. Ensure accuracy in the return uploaded and where minimize the need of manual reconciliation on data maintenance. Software is also programmed to ensure that the bill amount is automatically displayed on the point of sale machine. Now, though which this customer makes a payment either through a debit card, credit card, or through UPI, the case of the customer opt to make payment in cash, enter the amount on the screen will open the cash drawer in which the cash paid is deposited. Since the cash drawer is opened through the system only after logging in by a concerned person, in the case of mismatch of such cash balance, concerned person can be identified, therefore reducing the change chances of misappropriation of cash. Benefits of automation process: streamlining data entry. Automation tools such as optical characters recognition (OCR) and barcode recognition technology can help to automate the entry of data from source documents such as receipts and invoice. They can reduce the amount of time and effort required for manual data entry, as well as minimum potential for human error. Accelerated data processing. Automation can help us process a large amount of data, large amount of transaction more quickly and accurately than manual method. For example, software can automatically categorize a transaction with the appropriate account, calculate tax amount, generate financial statements among their tasks, enhancing accuracy. Automation can help to reduce errors and discrepancies in the accounting process by amounting and accounting tasks such as data entry and calculation. Business can minimize the task risk of error calculated by the human error, providing the accuracy and reliability of financial data. Improving decision making. Automation can make real time insights of financial data, enable business to make informed decisions more quickly. This automated report, the time spent on the routine tasks generally greatly minimize, enable business to gain deeper insights in the financial performance, identify trends and patterns, and adjust strategies accordingly, save time and money. Automation reduce the amount of time and resources you required for the performance of manual tasks such as data entry and reconciliation. These results of business saved on staffing costs and increase the productivity and enable the accountant to focus on the higher level of task and analyzing and planning. Facilitating compliance. Automation helps the business day-to-day compliance with the regulations and standards to ensure accounting process meets the necessary requirement. As seen above, the automation ensure the data accuracy and data from the purpose of return filing. Further, it cases systems also program reporting tools can generate financial statement and meet the criteria of India AS and Indian GAAP, and the case may be. This would be ensure minimizing the risk of non-compliance or potential penalties. Challenge in the automation process. Automation will also comes with their own set of potential drawbacks and challenges. Some of them are mentioned below. It arises the need of ongoing training, educating, keep up the latest technology. Automation can present the risk of data breaching, cybersecurity that can compromise the security and confidentiality of financial data. Due to automation, there exists a potential loss of job. However, it can be mitigated by ensuring appropriate training to the workforce and remain updated technology. To summarize, automated help of the business achieve efficiencies, accuracy, and decision making accounting while save time and money facilitating compliance with regulations and robotic process automation. The robotic process automation is an embarrassing technology evaluating financial reporting process. Robotic process automation utilizes software robots, bots to automate the manual repetitive task in the financial data processing, analyzing and reporting by minimizing the human interaction with the digital system. Robotic process automation can extract and consolidate data, performing calculation, generating reports, and ensuring compliance with accounting standard. Adopted robotic process method of our financial reporting improves accurate, enhanced efficiencies, and free up the valuable time of financial profession to focus more strategic activities. However, the robotic process automation enables the process to achieve the timely reporting, cost savings, and increasing the data integrated, and ultimately leading to more reliable and insightful human information. Human information. Using the robot process under financial reporting, let us understand XYZ company is a group of companies that propose consolidate finance statements according with the NDAs 1 and 10. The streamline the financial reporting process. XYZ company decided to leverage robotic process automation in the case of steps involved. The XYZ companies have multiple subsidiaries and maintaining their own financial data. The robotic process automation boards are implemented to automate the process and extracting financial data from the subsidiary system and consolidate it into a parent company financial system. The board retrieves the relevant financial information, perform necessary currency conversion, and recognized intercompany transaction ensure that the accurate timely consolidated as per the NDAs 110 intercompany transaction need to be eliminated to avoid double counting and providing true representation of the group financial position. The reporting process automation bot or robotic process automation are programmed to identify intercompany transaction with the consolidated financial data. The bots automatically eliminates a transaction by adjusting the corresponding accounts and generate eliminates entry, simplified process and reducing the potential of error. Bot retrieve the consolidated financial statement from the parent company's financial statement and apply the necessary consolidation adjustment. They perform calculation of non-controlling interest, equity, and comprehensive income attributable to the parent and non-controlling interest. The bot generate a consolidated balance sheet and income statement, a statement of changes of equity, cash flow statements, ensuring accuracy and consistency financial reporting process. Cloud computing. The cloud computing refers to deliver the computing process over the internet. It allows accountant to access the data software from any device with the internet connection. The entire world hit 2020 to the probably biggest black swan. Even the past couple of decades, COVID-19 pandemic, the continuous lockdown, a severe impact on business operation come to the standline. This is turned down the viewed cloud computing as serious alternative compared to traditional client server architecture and physical location controlled by the entities themselves. The advent of cloud computing, person who access the system from this respective location work remotely during the lockdown ensure the accounting process and reporting requirement did not suffer adversely. Common application cause of cloud computing. Cloud storage. The service like Dropbox, Google Drive, Microsoft Office offer cloud storage solution that allows users to store and access their files and data anywhere in the internet connection. Users can save documents, photos, videos, other files in the cloud and synchronize through access multiple devices. Software service platform provides cloud-based software application that users can access and utilize the internet. For example, including Salesforce for the customer relationship management, Slack of the team combination, QuickBook Online for accounting and financial management. Infrastructure and service. Infrastructure provides a virtual computerized resources including server, storage, network infrastructure, and pay-as-you-go basis. For example, Amazon Web Services, Microsoft Amazon, Cloud Platform. These are the perform allows a business to scale IT infrastructure based on the demand without the need of physical hardware. Platform as a service. Platform as a service is a cloud-based platform that enables developer to deploy, managing application with the complexity of infrastructure. Example: Microsoft Azure's App Service, Google App Engine. Cloud-based computation collaboration. The application like Microsoft Teams, Google Play, Workspace, formerly G Suite, and Zoom provide cloud-based communication and collaboration tool that facilitate real-time messages, video conferencing, file sharing, and project management. Cloud-based e-commerce. The few platform enables program to set up manage online stores like e-com, cloud infrastructure. These platforms provide various products and catalogs, payment process, inventory management, customer analytics, big data analytics. And the cloud computing enables organizations to process, analyze a large number of data effectively. Services like Amazon, Redshift, and Google, BigQuery, Microsoft Access Data Lake Analytics provide scalable infrastructure for data, big data processing and analysis, and empowering business to drive a valuable insight in the data. Benefits of cloud computing. And the following are some of the ways of cloud computing and positive impact accounting. Improved accessibility. Cloud computing accounting software allows a user to access the financial data from any occasion with an internet connection. This is an increasing accessibility and flexibility of accountants and business owners, allowing them to work remotely and collaborate real time. Enhanced security. The cloud security accounting software provides typically offer advanced security features such as encryption, firewall, multi-factor authentication, helps in protection of sensitive financial data, cyber threats, and data breaches. Increases scalability. The cloud-based accounting software allows business to easily scale up and down these changes needed as the business grows as a result of the new user. This feature without having invest in additional hardware or software. Reduce the cost. A cloud-based accounting software typically requires a less upfront investment in hardware and software as well as ongoing maintenance costs. Can help business to save money in IT expenses and redirect these funds to other area of business. For example, the cost of installing Microsoft Office suite and laptop on Office are far more expensive than subscribing to online or the 365 suite, which is a web-based download. Further, the web-based download also provide option to continuously free updates, unlike Office suite offline counterpart. Streamlining collaboration. The cloud-based accounting software allows multi-user to collaborate in real time, reducing the need of manual data entry communication. These can help the streamline workforce and reduce the error caused by miscommunication. Improved reporting analysis. The cloud-based accounting software often include powerful reporting analytics tools that allows businessmen to gain deeper insights in the financial performance that help the business to make more informed decisions and identify area of improvement. Challenges in cloud computing. Following are the potential challenges that are embossed in the cloud computing. Since cloud-based computing, cloud-based software and complete online, they could be prone to hacker who would steal data and passwords and compromise the integrity of the process data, thereby cause disruption in the business. Strong net connectivity is a must for the cloud computing to be accessed. Though there is a huge surge of network and mobile connectivity in the past decade, connectivity is a non-metro tier 1, tier 2 cities are not well done. This could create accessibility issues to the users of cloud-based accounting software. Example of cloud computing. The finance team XYZ consists of the chartered accountant, financial analysis collaborating on the preparation of income statement. This utilizes cloud-based collaboration tools such as Microsoft Teams and Google Workforce. Enhance the efficiency and ensure the accuracy of reporting process. Using the cloud-based spreadsheets and shared documents, the financial profession from various occasions input and perform financial data in the income statement income statement template. This updated revenue figures, operation expenses, cost of goods sold, and other relevant information in your ensuring accuracy and comprehensive data collection. Though the cloud computing platforms, team members can work on the income tax statement simultaneously, regardless of the physical location. They can review, edit, and make real-time updates onto the document. For example, finance team in Mumbai can update the revenue figures based on the sales data received with the team in Bangalore and receive and revise the operation expenses based on the cost information provided. The cloud-based collaboration tool offer version control features, allowing the team to track changes, make the income statement over time. This ensures the latest version of always accessible and helps in maintaining audit trail for any revision or modification made during the reporting process. Once the income statement is prepared, the finance team can use cloud-based communication channels such as instant messaging, video conferencing, and discuss the documents and address any queries or concerns. Team lead, the finance manager can review the income statement, provide feedback, and approve the final version before submission. The cloud-based collaborator ensure that all team members have secure access to the income statement from the respective location. User access control and permission can be managed to restrict the access to authorized person only, and maintaining data confidentiality and security. Enterprise resource planning. The enterprise resource planning is a type of software that organization use. They mainly managing day-to-day business activities like procurement, project management, accounting, risk management, compliance, supply chain operations. The ERP systems connect correlates a multitude of business processes and enables a flow of data with them. It connects organizations share the transmission data from multiple resources and then eliminate the data duplication and provide data integrity in a single course of authentication. Nowadays, ERP systems are used by many organizations as the critical for managing thousands of business, various size, coverage, or industries. Cloud-based ERP applications are embedded with the next generation technology such as AI, machine learning, and digital assistants. Enterprise resource planning systems are designed around the single efficient data structure schema that is typically have common database. This helps to ensure information used across enterprise in normalized and based in common definition of user experience. These core structures are then integrated to business process thrive from workflows across a business department like finance, human resource, engineering, marketing, operation, connected system that people can who see in them. And since data is a lifeblood of the every modern company, ERP makes it easier to collect, organize, analyze, distribute this information. Every information a system that needs to be best to fulfill the role of responsibility. ERP also ensures that the data fields and attributes roll out the correct amount of company's general ledger so as to cost or properly tracked and represented. The key ERP principle is a central connection of data from mobile distribution. This center and centralized data repository. Everyone in the organization can confident the data is correct and up to date and complete. The data integrity is assured that every task performed through the organization from the regular quarterly final statement, single outdated receivable report. Benefits of ERP. It's impossible to ignore the impact of ERP in today's business world. As enterprise data and process are cached in ERP system, businessmen can align a separate department and improve the workflow and resulting significant bottom line saving. Example of specific business benefit includes improved business insight from real-time information generated by reports. Less operation costs through streamlining business processes and best practices. Enhancing collaboration of users, shared data and contracts are requalification and repurchase order. Better efficiency through common user experience across many business functions and well-defined business processes. Consistent interaction from the back office to the front office. Increase user adaptation rates for the common user experience and design, reducing risk from improved data integrity and financial control. Less management and operation costs through uniform integrity in data system. How does the ERP system work? The ERP system works. The ERP system works as the use of a defined system standard data structure. The uniform information entered from one department is immediately available to authorized user across the business. Uniform structure helps keep you overseen on the same page. Real-time data is then woven of business process and workflow across departments. Manager check as one location is doing significantly better than the other side and can significant and figure out why the finance department uses ERP for comparison of sale, profits, and other financial data often help execution of understanding the performance of organization, also setting up new targets. ERP system delivers the most valuable than money, more value when the company's module of each major business functions ensure the timely and accurate data entry, and the company uses business system for multiple vendors, and integration are generally possible to make the data availability flow into the ERP. The real-time data can use through ERP instead of benefit any process of workflow. Illustration step of integrating control over financial reporting in ERP. Integrated the internal control over financial cover reporting. In the enterprise resource planning ERP system offers key advantages of streamlining financial process, ensuring data integrity, promotion, efficiency, internal control. By automating and standardizing procedures, ERP system reduce the manual effort of minimizing the risk of error. It helps segregation of their duties and real-time visibility of financial data, comprehensive audit trials, enhancing the reporting capabilities, and proactive risk mitigation. The integration strengthening the financial control, accuracy, and compliance ultimately enables better decision making and reducing the likelihood of fraud and error. The following illustration step the integrating ICOFR with the ERP. Verify the process including identification, updating the internal external financial reporting requirement and deadlines. Financial team regularly review the regulatory guidelines and reporting requirements, set the regularity ensure that ERP system and financial closing process is aligned with the requirement. For examples, listed companies declare quarterly results as per the LODR filing of periodic return on GST, income tax, labor law, etc. A review of A review of document process ensure that aligns of the foreign organization financial reporting policies and regulatory guidelines. The financial team reviews document process of ERP system and cross-check the organization financial reporting policy and regulatory guidelines to ensure the consistency. Examples are accounting process relating to property, plant property, equipment, and depreciation inventory. Use of enterprise resource systems and management functions to track and validate the changes made to the financial closing and reporting process. And when the changes made in the financial closing and reporting process are banned, the financial team uses ERP system change the management functionality to track the records of the changes. They review the system logs and audit trial for changing made in the financial closing and reporting process as per the defined role of responsibility for the change or control, and including changes initiated approved the change management teams. Verify the changes in the process and authorized by the designation individual and with appropriate authority with system logs. The finance team reviewed the system logs, audit trial, and confirm that such cases of financial closing and reporting process are authorized by the designated individual with appropriate authority such as CFO and finance manager. If the change request is approved and documented with the ERP system to ensure the proper authorization and validation of single process. Validating the roles of internal responsibilities of financial closing and reporting process and clearly define the ERP system for reviewing user access metrics and configuration of the system logs. A review system logs and audit trial of responsibility assignment metrics. The RAM is a tool that project management and enterprise resource planning implement to define the compute the role of responsibility of individual and teams involved in project and process. The matrix clarify into responsibility, accountability, consult, and perform information of each task and deliver into the enterprise resource planning. Access of the qualification and training records of the individual assigned to financial reporting role in the enterprise resource planning. Validate the individual responsibility for financial reporting, having a necessary understanding of an organization operating and appropriate accounting knowledge. The finance team validates the individual responsibility of financial reporting within the ERP system, having comprehensive understanding of organization operating and process. And appropriate accounting knowledge. For example, HR records are involved in accounting and appropriate knowledge. Validating the discussion, decision, and alternative accounting treatment of significant events or transactional documents are and approved by the management. Reviewing the journal voucher listing by identifying the non-routine transaction. Review the system of standardized vouchers as text. The invoice verify defining a set of predefined templates and formats and defined types of journal entries to ensure the consistency and accuracy of the recording financial data. Review of ERP ERP systems, document accounting treatment and decisions, including approval and communication with the audit committee. Documentation, accounting treatment decisions refer to the process of accounting, maintaining comprehensive document relating to rationally analysis, conclusions related to accounting treatment chosen for specific transaction and events like recognition, long-term construction project. A review of ERP system user administration function to ensure appropriate individual have access to financial reporting process. Review system logs and the access trial of the responsibility assignment matrix. Review where the proper KYC validation controls are in the place of creating accounting master, and review the process of identifying the related party transaction. Separate ledger coding for related parties for auto tabulate transaction. The present as per the schedule 3 of company cycle 13. Valid the ERP system captures the document like appropriate accounting treatment of such non-routine events. Transaction and account balance of review the journal voucher listing. Use of ERP system audit trial and account reporting capabilities to validate that all the posting have occurred in the correct accounting period. Reviewing the accounting period of configuring the controls. In the ERP system, the accounting dates and transaction dates are captured and stored as part of our transactional data. They use various processes such as journal entry creation, financial statement generation, period end closing activities, and audit trails. Understanding the distribution between the date is important for accurate financial reporting, compliance, and analysis of business transaction ERP. Reviewing the system controls of preventing backdate and unauthorized adjustment to posting the review of posting date and transaction date and entries. Cybersecurity and accounting. The section seeks to provide oversight of cybersecurity threats and risk of exploiting impact of cybersecurity breaches on accounting firms, the clients which serves and access to the financial data firms and clients. The extent of modifying financial statement without the knowledge of the management. The section also discusses the best practice of mitigating cybersecurity risk. The section seeks to provide an overview of cybersecurity threats and risk and exploring the impact of cybersecurity breaches on the accounting firms and their clients, which may range from accessing the financial data of the firm of the client to the extent of modifying financial statement without the knowledge of the management. Protecting the financial information is crucial to prevent unauthorized access or data breaches. A legal regulatory framework like Information Technology Act 2000, Amendment 2008 prevent the collection, storage, and transmission of financial data. Non-compliance and data protection laws as lead to financial penalties and reputational damage. These sections are discussion-based practice for mitigating cybersecurity risks. Organizations have legal, ethical obligation to discuss cybersecurity incidents, financial inflation, cybersecurity incidents affect financial reporting through financial loss, reputational damage, and legal consequences. Reporting guidance for various references such as SEBI, RB, etc. Address and discuss the cybersecurity incidents of financial statement. Cybersecurity is a crucial concern of accounting professional. The sensitive financial data is often stored and transmitted digitally. With the increasing relation to the transaction knowledge in accounting, risk of cyber threats and breaches also increase. Cybersecurity breaches have been significant consequences, including financial losses, reputation damage, loss of sensitive client data. Some of the common cybersecurity threats are highlighted below. In all the cases, the aim of the attack would be either stealing the sensitive financial data or disrupting the operation and demand ransom money. Common cybersecurity threats. Phishing, PHIS and phishing attack. Phishing attacks are common cybersecurity threats that involve tricking user into clicking the malicious link and provide sensitive information. Malicious malware attack. Malware attack involves infecting a computer network with a malicious software that can steal data and disrupt the operation. Ransomware attack. Ransomware attack is cyber encrypting files and locking user out of system and demanding ransom payment, exchange of restoring access. Insider threat involves malicious attack employer and other insider who have access to sensitive data. And denial service attack. DOS attack involves overwhelming system of network with traffic and dispute operation. Supply chain attacks. Supply chain attacks involve compromised third-party software and hardware to gain access to system or network. Proactive measures to mitigate cybersecurity risks. In a view of cybersecurity attack and threat discussed above, it is important to take proactive measures to mitigate the cybersecurity risk and listed below. Password management. Strong passwords are crucial protecting sensitive financial data. Accounting professional that ensure that passwords are complex and change regularly. Encryption can be used to protect sensitive data during a transaction and storage. These IT teams and organizations should ensure that all sensitive data is encrypted using appropriate methods. Access control. The access controls are crucial for preventing unauthorized access to financial data. The accounting professions just ensure that access to sensitive data is limited to authorized personnel, and the appropriate access control in the place. The access control should be continuously reviewed and updated based on the changes in the management employee structure. Network security. Network security is a crucial protecting financial data from cyber security. You need to ensure that firewall and other security measures are placed and prevent unauthorized access to network. Employee training. Employees training crucial by ensuring that all staff members are aware of the importance of cyber security and understand how the protecting sensitive financial data. Data backup. Secure data backup crucial for ensuring financial data is not lost in the event of cyber security. Accounting professionals should ensure that the data backups are performed regularly and backup is stored regularly. Incident reporting planning. As an accounting professional should have an access clear incident reporting plan to place the event in the cybersecurity. This plan should include proceedings for detaining, containing, and mitigating impact of cybersecurity. Overall, cybersecurity is a crucial concern of accounting professionals and it is essential to take appropriate measures to protect sensitive financial data. The further of technology and accounting. Blockchain technology revolution of financial landscape is including financial statement preparation and undeniable. The chartered accounting involves financial reporting. Understand the blockchain is crucial. Stay ahead of the rapidly evolving digital era. All the core blockchain is decentralized and transparent ledger that enables immutable transaction. Unlike a transaction, traditional centralized system blockchains often distribute the data network where that information is shared and verified by multiple participants and eliminate the need of intermediate and any ensuring data integrity. The form from the financial data statement prepared perspective. Blockchain accuracy and reliability of financial reporting. By leveraging blockchain, financial profession can ensure trustworthy and real-time financial sample important. The evolution of how financial statements are prepared and audited and shared with the shareholders. The dynamic landscape enabling blockchain technology to essential chartered account to navigate the further financial reporting effectively. The key impact of blockchain and financial reporting. Enhanced transparency. Blockchain technology provides a decentralized and immutable ledger where transactions are recorded and stored in the transparent and tamper-proof manner. This increasing transparency ensures the financial data is accurately captured and can be easily audited, promoting trust and reliable financial reporting. Improve data integrity. Blockchain distributed ledger ensure that the transmission is verified and encrypted and preventing unauthorized modification in the tampering. These features ensure data integrity and reducing the risk of fraudulent activities and errors in the financial treatment. Streamline audit process. The blockchain technology ensures the real-time access of financial data, eliminating the need of timely consuming and manual data reconciling process. Auditor can directly access the blockchain ledger to verify the transactions, reducing their audit time and enhancing the efficiency of financial reporting. Enhanced security. Blockchain incorporates advanced cybersecurity algorithm and made it highly secure against the unauthorized access of data breaches. The financial data stored on the blockchain is encrypted and protected, and this minimizes the risk of data manipulation and unauthorized disclosure. These strengthen the security of our financial reporting. Simplified reconciliation. The blockchain decentralized ledger eliminates the need of various data across the different systems. With a single shared source of truth, the financial reporting process becomes more streamlined, reducing reconciliation effect and potential error. Cost reduction. Eliminating intermediates and central authorities. Blockchain reduce the cost associated with the transaction, traditional financial reporting process, and eliminates the need of third-party verification reconciliation, leading to the cross savings of our organization. Enhancing audit trail. The blockchain maintains a comprehensive, immutable audit trail of all transactions, providing a transparent and traceable record of financial results. As audit trail simplify the identify and investigation on irregularities or discrepancy, improve the accuracy and reliability of financial reporting. Real-time financial reporting. The blockchain real-time data available and consequence mechanism. Financial reporting can be performed more frequently and greater accuracy. Organization can create up-to-date financial statement, enabling the stakeholder to make informed decisions based on the most accurate financial information. Examples are using blockchain. Imagine a financial professional working in a multinational corporation and engage in a complex supply chain operation. The blockchain technology and company can create and decentralized ledger that records every step of the supply chain process, the raw material sourcing to final product delivery. These transactions are securely recorded on the blockchain, the real-time provision, real-time visibility and transparent to all stakeholders involved. Finance professionals can easily access the blockchain to verify authentication and accuracy of transaction, ensure that compliance with the regulatory requirement, and building a trust in the customer, investor, and auditors. Consider the financial profession responsible for conducting audit of a large e-commerce platform. Traditionally, audit involves manual interviewing numerous financial transactions, recording data of different sources, which can be time-consuming and prone to error. However, the blockchain technology and e-commerce platform can implement a blockchain-based payment system that automatically records and timestamp every transaction during the audit process. The finance statement can access the blockchain ledger to instantly verify transaction details, reconcile the data, ensure compliance with accounting standard and relevant regulations. A streamlined approach improves audit efficiency, reducing the risk of human error, enhancing the accuracy of human financial reporting. Imagine the financial professional working on the financial institution that handling sensitive consumer data with the personal information and transaction record. By utilizing the blockchain technology, the institution can implement the secure encrypted blockchain network to store and share customer data. The financial huge huge professions can ensure that integrity and security of data by leveraging the blockchain's cryptographic algorithm and conscientious mechanism. These eliminate the risk of unauthorized access, data tempers, and data loss which blockchain the finance profession can confident handling customers data, knowing it was protect the robust of transaction process, enhance the data privacy, and maintaining the trust of the customers and regulatory bodies. Artificial intelligence, the AI refers to the simulation of human intelligence machines to enable them to perform tasks that typically future requires human intervention. Apart from the aspect of automation, accuracy, fraud reduction, and cost saving, the most important feature of enabled predictive analysis. AI can be used to analyze large amount of data and make a prediction about the time trends, which can be useful for forecasting financial performance and identifying potential risks. As the AI has implemented transformed the accounting profession by enabling accounting to provide more accurate and timely financial information to the clients. While technology has transformed the accounting process for our profession, it has presented challenges around the need of ongoing training and education. The risk of data breaches, a potential loss of jobs due to automation. However, the technology also presented an opportunity for accounting to expand their skills. They offer new services like clients and automated routine activities, thereby freeing up the human resources or tasks required greater application of knowledge and skills. The section C is a provide understanding how the AI and machine learning are transformed, disrupting the accounting profession. The chapter provides an introduction of AI machine learning, explores the application of accounting, discussion benefits and challenges associated with the adaptation of artificial intelligence and machine learning are the technologies that enable computer to learn and perform tasks without being explicitly programmed to do so. The AI and MLs are having significant impact of accounting profession. Enable the accounting professional to automate the routine tasks and improve the decision-making process and reducing error. Benefit of artificial intelligence and machine learning used in accounting. Automated data entry, the machine learning and AI algorithm process extract data from invoice receipts and other documents. Reducing need of manual data entry. Program AI and ML algorithm also review the bank statement and pass entry the system. Follow up the data reconciliation that will be automating the entire process, saving time and improving efficiency. Fraud detection. AI can help detect the fraud by analyzing the large amount of data and identifying the patterns that would indicate fraudulent activity. Financial forecasting. ML can use to develop the predictive model that forecasts financial performance based on historical data, market trends, and other factors. This predictive model can be a particular advantages as estimates are required to make financial reporting. For instance, where a store sells goods, offer voucher, giving customer discount on subsequent purchases. NDAS 115 requires a degree of estimate and the likelihood of availing such a discount in the to record revenues. The predictive models can track the customer productiveness and the likelihood of availing the voucher. In the case of elimination of revenue requires in AS 115 becomes more realistic. Accounting You estimate the likelihood available as discount record and record revenue. And the predictive model that track the customer preference and likelihood available vouchers as estimate the revenue recovered at 115 becomes more realistic. Accounting automation AI can analyze the financial statement and other data to identify the error and inconsistencies and making accounting more efficient and accurate. The tax compliance AI can help automate tax compliances by analyzing the financial data, identifying tax obligation, and ensure that business remains competent with the tax regulations. Challenges with artificial intelligence. Along with the advancement of AI and ML, where the following potential challenges are risk associated with the adaptation of AI, machine learning, like data, privacy, security concerns, technology complexity, need train employees to organization to extract capability of AI from one system. The artificial intelligence and ML technology expected to continue to transform the accounting landscape with the development of more advanced applications like natural language processing and cognitive computing. However, the adopting of ML and AI ML accounting will require careful consideration of benefits and risks as well as ongoing education and training for accounting professionals. Emerging technology are changing the accounting landscape and holding a future of accounting profession. The emerging technologies, artificial intelligence, machine learning, and robotic process automation have regulatory impact of accounting process. These technologies have the potential to revolution the key way of accounting done. The accounting routine task and reducing errors and providing a real-time insights in the business performance. For example, AI and ML, which uses to automate the task of such data, ever the account reconciliation and final data. The potential benefit of technology in accounting profession that includes increased efficiency, accuracy, and cost savings. However, technology can come with its own potential challenges. A risk such as need to be specialized skills and expertise in risk of job displacement and need to maintain security and privacy. Accounting profession must be willing to adapt these changes and develop a new skill and competency to stay relevant in industries. The preceding section emphasizes the need of ongoing education and training to ensure the accounting profession have skill and knowledge required to leverage this emerging technology. The emergence of technology likely to lead significant changes in the industry, which is need new business models and rise of new types of accounting service. As accounting profession becomes imperative to understand the new business models based on which accounting can be done to give a true and fair view of affairs of the companies. The accounting profession who is willing to adopt these changes and develop a new skill and competitiveness will better position to perform value-added service to the clients or organization and maintain a competitive edges of the industry. Illustrate example use of artificial intelligence of financial reporting. Example section 9 using artificial intelligence of financial reporting. XYZ company, a large multinational corporation need prepared financial statement using India's. Company has vast amount of financial data stored in various formats including spreadsheets, PDFs, scanned documents. Manual extracting analyzing the data is a time consuming and error prone. By implementing AI driven optical characteristic recognition OCR technology, company automates a data extracting process from a diverse source converting it into structural format. This enables seamless analysis of financial resources and reducing the human effort and minimizing the risk of error. PQR company financial institution need to comply with the NDA's requirement while monitoring and mitigating fraud and risk. AI power algorithm can analyze large volume of financial transactions, identify the pattern, detect the potential anomalies, and indicating of fraudulent activities. By implementing the machine learning techniques, the company can create a predictive model that learn from historical data, enabling a large reduction of suspicious transactions and reducing the risk of fraudulent fraud. ABC company, a manufacturing entity, wants to forecast the financial performance based on the various scenarios to comply with the NDA's guidance. AI can assist in generating accurate financial forecasts and analyzing historical data and market trend and relevant external factors. By elevating the machine learning algorithm, the company can stimulate different scenarios like changes in the market demand, input cost, regulatory requirement, helps manage to informed for decision assessing potential risk and develop the robust financial strategies in accordance with the NDA's principles. A2Z company, a publicly listed entities faces the challenges timely financial reporting and compliance with India's regulation. AI-powered tools can integrate the company's financial systems and automate extract relevant data in real time. These tools apply data validation rules and performing calculation and generate accurate Financial report for leverage of natural language processing (NLP). AI system can also assess the revenue, reviewing financial statement, identifying potential error, ensuring compliance with the NDA's requirement, improve the accuracy, efficiency, speed of financial reporting process. Indian Accounting Standard (NDA) is an information technology. Indian Accounting Standard is a predetermined and principle-based framework. NDA consists of specific principles for various accounting topics such as revenue recognition, leasing, financial instruments, employees benefit, consolidation, and more anymore. The principal provide detailed guidance how to account the transaction accordance with the principles and measures and calculation. For instance, the India as a technology will play a key role in automation of a process and validating and generating report. However, the role of technology for many processing directly related configuration and accounting level, the rule-based validation, configuration implementation, predefined validation rules, wherein the techno system is identified discrepancies and non-compliance with NDAs. If the system account level configurations are not done properly, then the next phase of using technology will be after generating the report. In such scenario, the use of technology after application of such Microsoft Excel, Google Sheet, which can be used to perform such validation after the NDA's point of view and they generate the report. This purely depend upon the human intelligence rather than technology, except the case where artificial intelligence involve proper training such machine learning. A listed company financial transaction cannot ERP following financial reporting weakness are observed during the internal control of financial reporting. There is no appropriate document process with respect of financial closing reporting, including identifying, updating internal, external financial reporting requirement details. Changes made in the financial closing and reporting process are not valid and properly authorized. Roles and responsibility of financial closing and reporting process are not clearly defined, document updated, not communicated in appropriate departments and individuals of timely basis. Individuals of financial reporting roles do not have any necessary understanding of the organization operation, appropriate accounting knowledge to properly perform the assigned responsibility. When alternative accounting treatment is available for the significant amount of transaction, the issues of which treatment of select is not documented, approved by the government, and not communicated to audit document committee. General policies are not established and document regarding permission overriding existing policies and procedures of financial closing and reporting process. User profiles and general ledger are not monitored, maintained, and ensure that the appropriate individual have access to financial reporting process. Appropriate accounting treatment is not specified each non-routine transaction accounting balances, including required use of accounting estimate, judgment, selecting of applicable accounting processes. Relevant, sufficient, reliable data are necessary to record, process, and report such non-routine event and transaction non-caption. There is no procedure to ensure all the posting has been done to a correct period. Application of the entity accounting policy of each non-routine event transactions are not performed on timely basis and appropriate document of knowledge and qualified person using approved method of formatting. All non-routine events and transactions are not accurately processed in the appropriate accounting period. There is no independent review of applicability of a entity's accounting policies, and such non-routine events and transactions are appropriate and absence of bias of individual, appropriate level of authority and experience. And there is no basis of significant estimates and judgment associated with the non-routine events and transactions. No analysis of report accurately and consistent in accordance with the entity's defined financial closing process and appropriate accounting period. All sources of information, routine and non-routine events and transactions are not identified and analyzed. There is no reconciliation of our and significant accounts and no independent review of the reconciliation. All intercompany transactions and balance are not identified, reconciled, appropriately eliminated in the consolidated and appropriate accounting period. All suspense accounts are not identified or monitored. Trial balance is used to prepare the financial statements are not generated from final general ledgers. All the trial balance accounts are not appropriately consistently grouped for presentation in financial statements from accounting period presented. There are no restriction access the run to run transactions and authorized reconciliation software which may comprise of integrity and financial data. All related party activities or transactions are not identified and authorized appropriately accounted for and disclose accounting appropriate accounting period. There is no procedure to ensure that all posting have been accrued at a current period. The entries provided record directly, indirectly, or not provided. Provide illustrative step of financial closing and reporting. So, following illustrative step of financial closing and reporting. Verify the process of including identification, updating internal, external financial reporting, and respective deadlines. Review the document process and ensure the align with the organization financial reporting policies and regulation and guidelines. Use ERP system changes management function to track and validate changes. Many made to the financial closing and reporting process using system log and audit trail. verify changes that to process the authorization and designate individual appropriate authority using system logs. Review the change request and approval documentation in the ERP system to ensure proper authentication validation process changes. Validate the roles and responsibility of financial closing and reporting process are clearly defined with the ERP system to review users access matrix configuration and system logs. Access the qualification and training records of individual assigned to financial reporting roles with the ERP system. Validate the individual responsible for financial reporting having necessary understanding of organization operation appropriate accountability. Validate the designation of alternative accounting treatment with significant events or transactions and document and approved by the management review of journalism. Review the ERP system document accounting treatment decisions and including appropriate communication audit trail. And there's a review of ERP system administration function, the proper approved individual have access to financial reporting process. Review the proper KYC validation process to place a create account master and review the process of identifying related party transaction. Validate the ERP system capture and document an appropriate accounting treatment of each non-routine activity and transaction account balances by reviewing the journal vouchers listing. Use ERP systems, audit trials, and reporting capabilities to validate that all the posting have been occurred in the correct accounting period and reviewing the accounting period configures controls. Review the system controls by preventing backdate unauthorized adjustment and posting by reviewing the posting date and transaction date of entries. The company XYZ is manufacturer company that implement NDAs to and wants to advise you to utilization of the entire system of an inventory management. They may aim to integrate ICOFR controls into the ERP system to ensure that inventory systems are valuation minimum risk of inventory fraud and enhance the process of efficiency accordingly. They need to guidelines the integration of ICOFR in the ERP system. Also advise the steps to be followed. The company cannot afford ERP system, but it still wants to ensure proper implementation of NDAs to an extent possible solution. The ERP systems for inventory management. The ERP system integrates all relevant modules such as inventory management, production, purchasing, cost accounting. This ensures data consistency, reducing the manual errors and recording processing transactions. The following illustrative steps may be followed in configure enhancing ERP in following models. Maintaining, updating, accounting bills of system BOM. Managing within the ERP system, specifying the components required for unit control unit. That allows the system to calculate the total cost of material accurately by considering the quantities of cost on each component. Implementing purchase order control with the ERP system to manage the procurement process effectively. This includes verifying purchase, requesting, obtaining appropriate approval, ensuring that the correct quantities and cost materials are recorded. Define the appropriate cost method within the ERP system to allocate the cost inventory accurately. The ERP system should be configured to apply chosen costing method consistently across all inventory transactions. Tracking labor costs with the ERP system that integrating of TM keeping of attendance system. This ensure accurate recording of numbers of hours worked by productive workers. Enable the calculation labor cost based on the definition of hyperload. Defining the overhead observation rate within the ERP system to allocate production overheads to inventory as a rate based on the normal level of production environment. The ERP system would apply the overhead rate consistently to all the unit production during the period. Integrated ERP system with a natural general ledger and exposure allocation module to accurately allocate the pros, non-production expenses of factor rent, energy cost, and selling of administration costs. This ensures that the expenses are appropriately recorded and reflected in the cost inventory. Perform periodic reconciliation between the inventory costs within the ERP system and physical inventory accounts. This helps identify the discrimination and ensure accuracy of inventory valuation. Inclusion of reporting analytical capabilities of the ERP system generate accurate and timely reports on inventory costs. These inventory should provide details of breakdown of additional material, labor cost, overheads, and any other relevant cost components. Integration of ICOFR and ERP system. The management of the company XYZ may integrate ICOFR controls ERP system by using following buttons. Integration of ICOFR using ERP system is configured to enforce segregation of duty within the inventory management process. For example, system restriction ability to integrate purchase order and recognize goods and update the inventory records to separate individual. The segregation ensures that no single employee has the ability to manipulate the inventory quantities and value to the appropriate check and balances. expenses. ICOFR is incorporated by implementing access control in the ERP system. User can grantly access to inventory related function based on the laws and responsibility. For instance, a only authorized person can modify the inventory master data, updated cost information, and perform inventory counts. They prevent unauthorized access and reduce the risk of data manipulations or theft. To ensure the proper authentication, ERP systems include workflow process, approval process for inventory transaction. For example, when a purchase request is raised, the system automatically routes through with predefined approval hierarchies and based on the transaction value and other criteria. These ensure that the inventory purchase are authorized by the appropriate individual before they are processed. Company utilizes a barcode radio frequency identification RFID technology to ensure inventory control and accuracy. ERP system is integrated the barcode scanners of RFID readers, allowing the real-time tracking of inventory movement. This reduces the manual data entry errors and provides accurate time-to-date inventory information into the system. ICOFR provides periodical physical inventory counts to verify accuracy and recording physical quantities. ERP system supports the process of generating inventory count sheets and reporting based on the predefined criteria such as product criteria and allocation. The systems can also reconcile the physical unit result with the recorded quantities, the highlighted and discrimination of the further investigation adjustment. The technology-driven data analytics tools are implemented in the ERP system to identify inventory-related exceptions and anomalies. For example, the system can analyze inventory turnover ratio, slow-moving and absolute items, and absolute and abnormal inventory cost fluctuation. These analytics helps in detecting potential control weakness of irregularities, enable timely track of management. ERP system can provide management dashboard, a customized report that display key inventory control, and dashboard summarize information of inventory turnover, stock evaluation, valuation accuracy. This monitoring decision valuation accuracy, this facility monitoring and decision making enable the management to access the efficiency of ICOFR controls and take corrective actions if needed. Inventory management in the absence of efficiency ERP system. In the absence of ERP systems, in the absence of properly configured ERP system, the alternative procedure are available in exporting data to spreadsheet. Perform following steps: export of relevant data from the accounting package, including information such as quantities, cost, labor hours, overhead expenses into spreadsheet. Ensure that the exported data contains all the necessary details to calculate the inventory cost accurately. Organize the exported data into appropriate columns. Label such columns with the corresponding data such items code and quantities, cost, labor hours, other overhead expenses. Use the formula to calculate the material cost of each item. Multiply the quantity of each component by the corresponding cost. If there is a multiple component, sum up the cost of all the component to get the total material cost of each items. Use the formulas to calculate the labor cost of each item. Multiply the labor hours for each item to define the hourly rate to obtain the labor cost. Determine the overhead absorption rate based on the normal level of production per month. Multiple the rate of total labor hours to calculate the total overhead cost. Divide the overhead cost by total quantity of time items produced to get the overhead cost per items. If there is a non-production expenses such as rent, energy cost, or administration cost, allocate them to each item using an appropriate method. This is based on the quantities, labor hours, other relevant activities. Formulate the description, distribute the expenses accordingly. Some of the material cost, labor cost, overhead cost, and allocation non-production expenses, and each time observant of total inventory cost. If you have physical inventory counts, then compare the calculated inventory cost in spreadsheet with the physical counts. Identify any discrimination in inventory cost. Adjust the inventory cost and necessary to reconcile them in the physical counts. Create and report and spreadsheet that will break down the inventory cost of each item, including material cost, labor cost, and allocation of these expenses. These formally charters present in the information clearly. Companies that engage in the business of importing oil seeds or for processing well as trading purposes to enter the following types of contract must have the name, age of contract, progress of contract, quantity, net settlement practices for contract. But of oil seed demand 100 metric thousand rate. Yes, there has also been several instances oil seeds have been sold prior to shortly after the delivery. These estimates net settlement constitute approximately 30% of the value of total imports. Agile contract purchase of oil seed from domestic supplier and a contract to sell the oil seeds to commodity exchange. Quantity for 50 metric ton, 330,000 per metric ton available on 30th June. Contract terms manufactured on 15 January. Net settlement is at a settlement practice for some contract as companies that net settlement some of the domestic purchase contract. However, these instances constitute only 1% of total domestic purchase contract. These remaining contracts are settled by taking delivery of oil seed, which is used for further processing. Yes, as a contract required to net settle with the exchange on the mature date. Companies that enter into this type of derivative contract to hedge the risk of domestic oil seeds and purchase contract. Companies that want to determine the contracts entered into the for purchase and sale of oilseeds or derivatives within the scope of NDAS 19. These executed contracts outside the scope of NDAS 9 through the company is using the ERP accounting package. It is not properly configured to provide required reports about the said decision making. Therefore, the company is requires you to advise whether the process of determining the nature of content is possible through use of external source of information. Yes, it is possible to extract the data from the accounting package and connecting to the database of accounting policy. For example, the same can be done by connecting a spreadsheet of database through OCD connectivity and extracting data from the accounting package into spreadsheet. In case of data is being extracted from accounting package, the following step is followed. Identify the relevant data into the accounting package and contain the contract information such as contract particulars, quantities, rate, and settlement date. Export the required data of accounting package into compatible form CVC, Excel, or other supporting format. Open the exported data in Excel and clean the data and remove unnecessary irrelevant columns and rows. Ensure that the data is properly formatted and aligned in the further analysis. Define the rule of criteria and categorize the contract and derivatives and execute about the requirement of NDS 19. Establish the conditions as Excel function, formulas, logical functions, evaluate the contract data. Apply the definition rule criteria and contract data using Excel formulas and location. Use the functions like if, and, or, VLOOKUP and evaluate the conditions to determine the nature of the contract. Create additional columns in Excel to categorize the contract based on analysis result. Assign appropriate labels, values, and indicate whether the contract is derived in the necessary contract. Relationship over entity provide brand service the customer along with the voice call services. Customer buys modern from the entity. However, the customers also get connected from the entity and modern from other entities. This actually activities various limited efforts or cost involving almost insufficient. The various plans provide either broadband service or voice call service or both. Common how they identify whether the performance obligation under the contract is distinct from the using the automated process. Identify the performance obligation under the contract. Identify the performance obligation under the contract. Determine if it is distinct and any automated process can be implemented using technology. Following steps will take an analyze the clause of contract and relevant to the service provided, broadband services, voice call service, and modem sales. Each clause shall be codified using an appropriate parameter and tag the capture relevant information. Assign boolean value 0 and 1 each parameter. Tag the qualified clause. Use 0 to represent no and 1 to represent yes parameter. Define the criteria and evaluate the performance obligation used in the parameters and boolean values. Consider the factors such as types of service involved, benefit derived from the customer, and promises made in the contract regarding transfer of goods and service. Develop automated algorithm to script the evaluate boolean values of the parameters according to the defined criteria. Calculate the score and weight of each parameter based on the significant determine performance obligation. Utilize the scores of the weighted assigned and the parameters and determine the performance obligation listing. In the scores exceeding threshold since separation performance obligation. Automated process should flag and identify certain distinct performance using the evaluation. Professional ethical duty of chartered accountants. After studying this chapter, you will comprehend the code of ethics, fundamental principle and consumption framework applicable to all chartered accountants. Comply with the code of ethics relevant to chartered accountants, servers, and practices, and realize the implementation of various schedules of chartered accountants and act and result of professional other misconduct. Chapter overview. Professional ethics. Code of ethics. Chartered accountants at 1949. Council guidelines and recommendation of self-regulation measures. Chartered accountant membership of institute. Chartered accountants and practice. Chartered accountant service. Types of misconduct. Professional other misconduct. Disciplinary procedure. Schedule to the act. First schedule and second schedule. What are ethics? The Merriam-Webster dictionary defines ethics. Ethics to be set of moral principles, theory, system, moral values. The principles are the code of governing individuals or the discipline dealings with the goods and bad with the moral duty and obligation. Ethical principle in financial reporting. ICA Codes of Ethics 2019 code is developed adopting provision of International Federation of Accounting (IFAC) Code of Ethics account chartered account identifying fundamental principles relevant to accounting. This code of ethics is applicable to 1st July 2022. The code has been derived from International Ethics Standards Board of Accountants (IESBA) Code of Ethics 2018 issued by International Federation of Accounting (IFAC). This code set of the fundamental principle of ethics of chartered accountants herein also called as accountants reflecting the regulations and responsibility of professional chartered accountant public interest. These principles establishing standard of behavior expected in the chartered accountant. The code provision of consumption framework of chartered accountants to apply in order to identify the valuation with addressing threat of complaints of fundamental principle. Like school set of the requirement of application material to various topics to help accountants to apply the consumption framework of these topics. The principle laid out in the code of ethics and pertaining to the set of studies and reviewing other assurance engagement, including independent standards established by the applicable consumption framework, the threat of independence, and to a resolution to those arrangements dealt with the details of accounting, advanced accounting assurance, and accounting ethics. Chartered Accountant 1949, the person qualifying chartered accountant became the member of registered with the Institute of Chartered Accountant of India. Every member can carry out the profession other conduct as per the Chartered Accountant 1949. Members liable to disciplinary action, Section 21 Chartered Accountant Act, it is guilty of professional misconduct. What is a professional other misconduct for the chartered accountant? According to Section 22 of expression, professional other misconduct shall be deemed to be include the act and omission provision section of the act. Professional misconduct. Professional misconduct has been defined in the Part 1, Part 2, Part 3 of a schedule of Part 1, Part 2 of Schedule Act. Members who engage in the profession of accounting, whether in practice or service, would conduct a result in action in accordance with the provision contained in the respective parts and schedules. If the member is found guilty of any of the acts or omissions stated in any prospective parts of the schedule, he shall have to be deemed to be guilty of professional misconduct. Other misconduct is defined under the Part 4 of the first schedule of Schedule 3 of the schedule of the second schedule. There is a provision empowered that council is ensured that any of the misconduct of the member, even if it does not arise out of the professional work, that is unnecessary, that is considered necessary because chartered accountant is expected to maintain highest standard of integrity, even if the personal affairs are any deviation from the standards, even in the non-profession works who expose human and disciplinary actions. Types of schedules. First schedule, second schedule, first schedules. Part 1, Part 2, Part 3, Part 4, second schedule, Part 1, Part 2, and Part 3. Schedule 1, Part 1, professional misconduct relation to chartered accountant practice, all classes. Part 2, professional misconduct relation to members of institute or service, 2 classes. Part 3, professional misconduct relating to members of institute generally, Part 3 classes. Part 4, any other misconduct relating to members of institute generally, 2 classes. Second schedule, professional misconduct relating to chartered accountant practice, 10 classes, and professional misconduct relation to members of institute generally, 4 classes. The other misconduct to the members of institute generally, class 1. The classes provide Part 1, Part 2, Part 3, and second class, Part 1, Part 2, Part are perform of flowchart. However, detailed explanation of the chapter professional ethics, advanced auditing assurance ethics. Second schedule to the schedule the chartered accountant 1949. Part 1, professional misconduct relating to chartered accountant practice, 10 clauses. Class 1, disclose the information accrued in the course of professional engagement to any person other than the client, so engaging him without the consent of his client otherwise than required by any law of time being forced. Class 2, certifying submit the name on his fame or name of his firm. Report the examination of financial system, and unless examination of such statements audited records has been made by him a part of the employee in the form or another chartered accountant practice. Clause permits this name of permit this name or name of the firm to be used in the connection with the estimate of earning contingent upon the future transactions in a manner which may tend to relieve the voucher or the accuracy of the forecast. Clause for expression is opinion in the financial statement of any of the business enterprise in which his firm or a partner of his firm has substantial interest. Clause 5 fails to disclose particular material fact or no it is be non-disclosive financial statement. disclose in the necessary to make a financial statement whether the concern financial statement of professional capacity. Class 6 failed to report a material misstatement known to him appear in the financial statement with which he is concerned to professional capacity. Class 7 does not exercise due diligence or gross negligence in the conduct of professional duties. Class 8 failed to obtain sufficient information that necessary to express opinion. The exception to sufficiently material to negotiate expression opinion. Class 9 failed to invite attention to any material departure on the general accepted procedure audit principles as acknowledges. Class 10 failed to keep money to this keep monies of this client after other than fees remuneration of money meant to be expanded to the separate banking account or to use any of the money or purpose of which is intended for within a reasonable time. Part 2 Professional misconduct in relation to members of the institute generally for class 1 contravenes of any other provision of act or regulation under or any guidelines issued by the council. Class 2 being an employee of a company, firm or a person discloses confidential information occurred in the course of employment except as when required by law of time being enforced or expected as permitted by the employer. Clause 3 involves any information, statements, returns, or form of submitted to the institute council or any other committee, director discipline, or a board of discipline, or disciplinary committee, quality review board, and apprentice authorities, or particular note then known them to be false. Clause 4 defalcates or embezzle money received in the professional capacity. Part 3 of misconduct relation to members of institute generally. Clause 1 member of the institute where in practice or not shall be deemed to be guilty of other misconduct if he been guilty of any civil criminal court or an offence which is punishable in penalty exceeding 6 months of imprisonment. Guidance note the court of for the conduct of the member between employees council guidance appendix 34 of Charter Act 1949 state the members of institute who is employee shall exercise the due diligence and shall not be grossly negligent in the conduct of duties. The following part of code of ethics can be dealt to the financial reporting complying with the code fundamental principle and conceptual framework applicable to all chartered account relevant from the part of section covered in the details of subsequent page. Chartered account service relevant to a section covered in the details of subsequent pages. Part 1 Complying with the Code of Fundamental Principles and Conceptual Framework. Complying with the Code. Distinguishing mark of accounting profession is the acceptance of responsibility of act of public interest. Chartered accountant as a responsibility is not exclusive to satisfy the need of individual client or emphasizing or employing organization. Therefore, the code contains a requirement of application material to enable chartered accountant meet their responsibility act in public interest. Chartered accountant shall comply with the code. There might be circumstances where the laws or regulation preclude the accountant from carrying with certain parts of the code in which circumstances which the laws and regulation prevail. This accountant shall comply with the other part of the code. The principle of professional behavior requires chartered accountant to comply with the relevant laws and regulations. The accountant need to aware differences in local regulation from the provision set out in the code and comply with the more stringent provision unless prohibited by laws and regulation. Fundamental principle. There are 5 fundamental principles of ethics of one chartered accountant: integrity, objectivity, professional competence, confidentiality, and professional behavior. Integrity to be straightforward, honest in all the professional and business relationship. Objectivity is not to compromise professional business judgment because of the bias, conflict of interest, or undue influence of others. Professional competence and duties. No, to attain the maintain of professional knowledge and skill to level of required to ensure that clients and employee organization receive competent professional service based on the current technician professional standards and relevant legislation. Act diligently and according to the applicable technical professional standards. Confidentiality. Respect of confidentiality is acquired result of professional and business relationship. Professional behavior. The comply with the relevant laws and regulation. Avoid any of the conduct of chartered accountants known and who should know most discredited the profession. Chartered accountant shall comply with these following professional fundamental principles. The chartered accountant might face a situation which complying with one of the fundamental principle conflict comply with more than one fundamental principle. In a situation that the accountant should ensure consulting others within the firm's employing organization, those charged with governance institutions or legal counsel. Where such consultation does not relieve the accountant for the responsibility to exercise professional judgment to resolve the conflict of necessary unless prohibited by law or regulation, disassociate from the matter creating the conflict. Integrity. The chartered accountant should comply with the principle of integrity. They should require the accountant to be straightforward, honest in all the professional business relationship. Chartered accountant shall not unknowingly be associated with the reports or return communication or other information that accountant believes that information contains materially false and misleading statement, contains statements of information provided negligently, omits obscure requirement information where such omission or obscure would be misleading. Objectivity. The chartered accountant shall comply with the principle of objectivity where requires to be accountant not to compromise a professional business judgment because of the bias, conflict, and interest or undue influence on the administration. The Info Star Limited listed company engaged in the process of IT systems and directors also paid a bonus share based on the profit achieving the company during this year. Range of profit bonus to directors less 1 crore to 5 crores 2%, 5 crores to 10 crores and 4% of profit, 10 crores 20 crores 6, 20 to 30 crores 8%, 30 crores and more 10% draft statement of profit as profit of a statement yes storing profit to 2 crores. Issue 21 Info Star sold a land locating registered to the head office of third party. Consideration of 40 crores is option. The purchasing of the land on the 40 crores plus premium 6%. The amount received from the transaction eliminates a business of bank overdraft imposter. And this on instruction of chief financial officer of the company who is chartered accountant who transaction was treated as a sale, including the profit arising on disposition of the statement of income on the year 2022. Record discuss that requires ethical accounting principle above said and request aspect of chartered accountant in service referred to the relevant NDAs where applicable. Accounting treatment. The sale of land means the conditions specified in NDAs 115 revenue from contract on the supply customer. For quantifying the repurchase agreement Infostar Limited, option to buy land for West Limited, therefore the control is not transferred to West Limited, liable to use and gain benefit from the land is limited. And the Infostar must treat the transaction as a financial arrangement and record from the assets and financial liability, which should receive then repayable with just Infostar should not have de-recognized their land from the financial statement because of the risk or reward of ownership is not transferred. Thus the respect of this transaction of loan 40 crores, a 6% premium or a repurchase effectively reflecting the interest payment. According to the aforesaid transaction sale is attempt to manipulate the financial statement overview shows an improved financial figure, more favorable cash position. This sale must be reversed and the land should be reinstated and this carrying the amount period to the transaction. Ethical issues. Chartered accounts are required to comply with the fundamental principle laid down in the Code of Ethics. These includes integrity. They appear with the integrity of a CFO, compromise situation, and accounting for the transaction of sale or not a loan and a franchise agreement. It is the effect of the accounting. It is sale, which means the end merely to improving the profit and eliminating the bank overdraft, thereby making the cash position seem better in it. The effective amount of window dressing, which is not honest as it does not present the actual performance of position of the other more info limited. Accountant must also act in act objectivity, which means they must not allow the biases, conflicts, undue influence other than override the professional business judgment. Therefore, the management must put the interest of the company and the shareholder before his own interest. The pressure shows the profit and achieving bonus is the self-interest of the director and seen have been partly derived in the transaction and subsequent accounting, which is early in conflict of interest. It is further necessary of the accountants to comply with the principles of professional behavior, which require comply with relevant laws and regulations. In the present case, accounting treatment is not confident with the NDAs. The given case does not make it clear whether a CFO is aware of this or not. If he is aware of his applied incorrect statement, he has not complied with the principle of professional behavior. This may be that he had under pressure from the directors to record the transaction in the manner. If, however, he is not aware of the treatment is correct, then he is not complying with the principle of professional competence as a knowledge and the skills is not updated. In such a case, he is subject to professional misconduct under Clause 1 and Part 2 of Section Schedule Chartered Accountants Act 1949. Clause 1 states a member of an institution, whether practice or not, shall be deemed deemed to be guilty of professional misconduct if he contravenes any of the provision of the act or the regulations made thereunder the guidelines issued by the council. As per the guidelines issued by the council, member of the institution who is an employee shall exercise due diligence and shall not grossly negligent in the conduct of his present duties, professional competence and due care, maintaining professional competence and regarding the continuing awareness of understanding the relevant technical professional business development, continuing professional development, ensuring enable child account develop the maintain capabilities to perform competence with professional environment. And due diligence encompasses the responsibility in act accordance with the responsibility of assigned carefully throughout the time basis. Complying with the principle of professional competence, due care, chartered accountants shall take reasonable steps to ensure this work of the professional capacity under the accountant authority have appropriate training and supervision. Roman Limited company engage in oil extraction has a present obligation to dismantle the oil rig installed by it at the end of the useful life of 10 years. Rodam cannot cancel the obligation or transfer it. Rodam Limited intend to carry out the dismantle work itself and estimate the cost of the work as 100 crores at the end of 100 years. And yes, the director Rodam was aware of the requirement of AS 37 provision contingency and AS 37 in provision contingency liability and contingency asset right with the PDAS 16 property plant and equipment. However, the purpose of expansion of cost of dismantling the oil rigs and winning no entries and disclosure in the latest financial statement. They argue that applicable India's involves judgment is although prudence of mentioning the confidential conception framework. It's only one among the many of the achieving the full faith representation and discuss whether the directors are acting unethically and above instances that can be practicing child account course of the record. Solution: the treatment of purpose of directors and contravening India 37. As per the India 16, India 37, the entity, the time of initial recognition of asset and capitalizes the present value of the cost of dismantling to be occurred at time of the life asset. The cost of the asset simultaneously created provision for the time. In this case, appears to be deliberate intention of contravening India 16 India 37 is not an unintentional mistake. Though a director can exercise a strong undue influence over a chartered account, the chartered account is bound to act in integrity and remains unbiased. And reason recommending to the directors of India 16 and India 37 must be complied with ensuring appropriate entries are passed in the financial system. And making a matter must be raised before the each executive directors examining the issue of them and ensuring that the financial statements are true and fair and comply with relevant years. It is essential for chartered account to impose these governance above the necessary correctness measured in the case. By doing so, upholding fundamental principles of professional behavior and demolish the compliance of relevant laws and regulations. By communicating with the corrective measure and responsible governance, chartered accountant ensure that the contravention of India 1697 address are rectified.